The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
There is another REIT flashing growth and income signals on the growth and income radar. Our strategist Todd Bunton's been keeping an eye on it, and he thinks that now's an appropriate time to let you know about it. So LaSalle Hotel Properties is what we're talking about.
Yeah, so they're a hotel REIT, a real estate investment trust. They own 47 properties in 10 states and the District of Columbia.
Yeah.
Their two largest markets are California and D.C., and like I said, hotels in other states, a lot of resort areas or business areas. But the hotel industry has been very strong, and LaSalle has definitely benefited from that. If you look at room rates, those have increased at a solid pace. Occupancy rates have been strong across the board, and that's really helped to drive solid income growth at these hotels. One of the reasons for the strong industry trends is an improving labor market, and then I would say also probably a nice tailwind from lower gas prices. People have more disposable income, they're more willing to travel, and that all benefits REITs like LHO. And if you look at the second quarter results, the company delivered a solid beat, and that was driven by solid RevPAR, which is a key metric in the industry that means revenue per available room. It's basically looking at occupancy rates and room rates.
Yep.
That was up in the mid-single digits, and that helped to drive solid profit margin expansion. The company actually delivered record EBITDA margins in the quarter. And like I said, all that money kind of flows on to the bottom line, and they pass that through to shareholders in the form of dividends.
Yeah, 5.8%, man.
Very solid dividend, yeah, which I'll talk about in a second. First, check out the earnings momentum on this chart, too. This is the direction of consensus earnings estimates among analysts. You can see a nice steady increase for both 2015 and 16, really over the last several quarters. You can see that nice bump up, too, after that last beat. But check out the stock price here. The stock price has actually gone in the opposite direction. That's pretty rare, and one of the reasons for that is the overall stock market pullback, but for REITs, the biggest factor would be interest rate risk. So back in the middle of summer, when we were getting solid jobs reports, the economy was improving, people thought, oh, the Fed's going to raise rates this year, we need to get out of REITs because they're more interest rate sensitive, and that stock price came down. But now the 10-year is right around 2%. We just had a weak jobs report, and the odds of the Fed raising rates this year seems pretty low. So REITs could make kind of a comeback here in the fourth quarter, I think. Again, you see that huge price dip here. Could be a good long-term buying opportunity. And like you said, that 5.8% dividend yield pays you while you wait for the story to turn around. The company actually increased that dividend by 20% earlier in the year because business has been so good. And if you look against its peers, you can see LHO has one of the highest yields in the space and also one of the lowest valuations in terms of price to forward funds from operation metric. And they also have one of the strongest earnings momentum stories with that Zacks Rank of 2. So could be good total return potential in this name throughout the fourth quarter and maybe even into 2016 as the Fed continues to push that interest rate hike off.
Sure. Yeah, my eye goes right to that dividend line, as you can tell. But as you point out, there are other considerations in the dynamics of what else is going on.
Absolutely.
When you consider investing in these things.
Yes, for sure.
Do you own it?
I do not.
All right. Well, you can check out more stock information on our website, Zacks.com, if you're not there already watching this video. And don't forget, if you're watching this video on the YouTube platform, there is when you can, or where you can subscribe to them and even comment on them. And we welcome the feedback. With Todd, I'm Terry Ruffalo.